What is going on, YouTube? And welcome back to the Trader Shop. My name is T. Hobbs, and this is another edition of the top down analysis. Uh, when I do the top down analysis, I usually try to focus on three stocks or three instruments. I focus on the ES, the futures market, ES, which is basically the SPY. And then I focus on the NASDAQ or the QQQs, if you're familiar with the other derivative. And then I also focus on the VIX, the volatility index. But this week is a little bit more detailed, right? There's a lot more going on this week that I wanted to make sure that I hit on in addition to covering those instruments. So the first thing I want to go over is all of the information in regards to, sorry about that beat. That's my trading view session here. In regards to what's going on for the entire week of fundamentals, because if you whether you follow market structure, whether you follow, supply and demand, whatever it is that you trade on, you have to understand that no matter what you do, fundamentals are the thing that drive people to buy or sell, right? So therefore, the first thing you should at least be aware of is fundamentals, right? The fundamentals drive the market, and this week is a plethora of fundamentals, right? Having that the market's at all-time highs, basically everything's pushing toward all-time highs. This earnings week and this earnings quarter, right, over the next 2 months or next month or so, should give us a pretty good insight on where the market's going to continue to go, in addition to the market structure. So starting off the week on Monday, pretty basic, right? It's Logitech, United Airlines, all that blah. I don't care about that. I care about, the Magnificent Seven and larger stocks inside of those ETFs. So that's why Tuesday, I think, is going to be very important after the bell. Netflix is reporting. If you've ever been a part of Netflix reporting, it's absolutely crazy. Usually, whatever you think Netflix was supposed to report, they usually beat it by 20, 30%, right? So I'm expecting another beat by Netflix, and they are big market movers when they get going. So we'll see what happens with them. But then on Wednesday, one of the big dogs are reporting. So the Magnificent Seven, you got Apple, Microsoft, Nvidia, Tesla, Amazon, uh, Microsoft. I think is the other one if I haven't said it. But Tesla is one of the Mag Seven, right? The Mag Seven, when they start to report, they start to give an idea of where we're going. Even though Tesla isn't primarily a tech stock, it is in the tech sector as well as the automobile sector, right? So we'll be watching Tesla to see how they do. They Wednesday after close, they'll be reporting as well. And then Thursday, we got all of the airlines, right? The airlines, your big oil, you got Capital One, you got a lot of big things are happening. And then it only gets worse from there on, right? As we go down a little bit further, we'll start to cover that, and we'll go over that through the next week, right? So the other thing that I wanted to cover, I'm just going to share this other tab here. The other thing that I wanted to cover that I think is important is that you need to understand where we are on the fear and greed index, right? So this is CNN business, CNN.com markets fear and greed, right? It's the fear and greed index. Now, do I trade by this? No, but it gives me an idea of where buyers are looking to continue to buy. We're in greed territory right now. But just like over here, when we were in fear territory, when the market was selling off, we still ended up getting down to extreme fear and people were still selling. So what do I expect on the greed side? Well, we're on the high end of greed, but they can continue to buy, right? When your greed keeps going, it gets into the extreme greed category. And I think we start to enter that over the next month or so, but we're not there yet. Therefore, I think the buy-in is going to continue. That's just my opinion. All right. And then last but not least, I usually like to go over some of the news, right? Like, do I care about the news? In a sense, I think you should be aware of it. That's my theory on the news, and that's it, right? So this is Monday. Nothing really happening on Monday. We go into Tuesday. Uh, Again, I really like to look for that red folder news, but there's really nothing on Tuesday either. But as we start to get further on in the week, the market starts to heat up, so to speak, and so does the news. You see all of these red folders start coming in. Flash manufacturing PMI on Wednesday, flash services PMI on Wednesday. That's kind of important. That will move the market. You should be aware of that when you're trading, right? We go into Thursday, right? We got a whole plethora of news. We got GDP, unemployment claims, core durable goods, orders, right? Everything is coming in on that Thursday. But then, in addition to earnings and everything else we got going on, guess what we got on Friday? We got core PCE to end the week. So this week is going to be an extremely volatile week. No shorts of volatility should be lacking in this market. So again, I don't trade fundamentals, but I definitely want to be aware of where the fundamentals are and what to expect so it doesn't slap me across the head. So let's just move on and let's get into these charts. So if we're looking at the monthly, right? This is the Nasdaq. I like to start with the Nasdaq and then I'll work my way over to the sorry, I had this on replay. I work my way over to ES, right? So when we're talking about top-down analysis, to me, everything is based off market structure, right? So if you don't understand the basis of market structure, I'll give you a quick tutorial. First of all, whenever you put in a low, right? And this is what we put in, you look for price to break that low, right? Which is right here. And then usually the low, which is another low right here, that calls this high, usually we come back down and retest that low, okay? Now, that's a very simple explanation. If you want to know more, join the Discord or come to the free YouTube channel. We talk about market structure 24/7 because I think if you don't understand the basis of market structure, I think that it should at least be a part of your thesis, okay? Because if you know market structure, you'll understand what I'm about to talk about. All right, so first and foremost, how am I viewing this chart? I'm viewing this chart with B adjustment on. Therefore, you will see that we're not above the all-time high yet. Now, if you don't understand what B adjustment is, basically the contracts are averaged into the new contracts are all averaged in by pressing B adjustment. If you turn it off, then it just gives you regular price action, right? With regular price action, we're well above the all-time high, right? You can see it right there. All-time high was 16,802, give or take. But I like to turn it on as long as I can because with a B adjustment on, it allows me to at least have some levels intraday to play off of without having to say, well, I think we're going to keep going here. I think we're going to keep going here. This gives me levels until we get above the all-time high, right? So now, last week we talked about this monthly, and I think this candle was like a little bit on the red side. I think we were down around sixes or the sevens or something like that. You can fact check me and go back and watch the video. And I said, hey, if we're going to be bearish, we need to get below, 389, and hold. When I say get below it, we need to close beneath it. Well, you can see we came all the way down to 6333 and we could not go any further, right? Therefore, that means that we were finding buyers on a monthly time frame much sooner, right? I mean, if we just took a fib, right, and we went from the top to the bottom, and if you don't understand how a fib works, basically think about going shopping, right? As a shopper, you're not looking to buy when something's extremely high price. You want to buy something when it's on sale. Well, what the fib does is it breaks down the sales for you. These are the Walmart sales, right? So down at 30%, 50%, you want to get something down here. If you put a fib on the previous month, well, where was the discounted prices? Big money is going to look for the discounted price. So if we look at this fib down here at the 30% level, that's exactly where price came in at the best price before we were going to start reversing where sellers are going to start taking control, right? This tells me that from a monthly time frame, buyers are still very much interested in pushing price up. All right. So that's pretty much the monthly. We have a monthly supply zone right here. We're just eating through this thing until we get to all-time highs. I think this is a little too high, so let's go about right there. Until we get to all-time highs, which is on B adjustment is 17,717. All right. So let's break down the weekly time frame. Let me just go down here and change this here. Let's take this off and take this guy off. Oh. There we go. All right, cool. And I'll just take this guy off, take the monthly off, and we'll go down and talk about the weekly. All right, there we go. All right, so moving on to the weekly time frame. If we come over to the weekly, we have that another additional inside the monthly, right? As you start to break price down, you'll see that there's supply zones inside of supply zones inside of supply zones, right? Like that's just how it works. Supply zones, demand zones, they're all there inside of larger time frames, right? Because time is fractal. So what happened on a larger time frame, you're going to see on a smaller time frame. right? So if we look at the weekly, you can see a weekly supply zone inside of that previous monthly that we're currently inside of. Price usually likes to reject the center. And the reason why I say the center is because of the same analogy I just gave you, discounted price, right? The center is usually the equilibrium, right? Where price is at a fair value, right? That's the reason if you have these rectangles on inside of on TradingView, they have added the feature that you can have a dotted line in the center. It's at the 50% mark of the rectangle, which usually is where price likes to reverse, right? Is this going to reverse here? I don't know. The bulls look extremely strong, but it's the same thesis, right? Whether you trade ICT, whether you just watch price action, doesn't matter to me. What matters is you understand where buyers are looking to get a discount. So if you take the Fibonacci from the prior week, right, and we just go wick to wick all the way down, guess where price came in? On the weekly, we bought at the 50% level, right? 16,715. That again reiterates the thesis that buyers are very still much interested on a weekly or monthly time frame. Now, where do we expect price? What do we expect price to do from a structural standpoint? Okay, let's analyze that. Well, last week we had this aggressive, or the week before we had this aggressive sell candle that came into the market. We were unable, this candle was, sellers were unsuccessful, meaning they were unable to break character or change character and close on a weekly time frame. Buyers stepped back into the market and we broke a high, right? Right here, right? Usually after you break a high, theoretically, this doesn't happen all the time, but theoretically, you usually get one, two, oh shoot, I pressed a little ink thinking. All right, so you usually get 1, 2, 3 full body candles, right? Before buyers start to get a little bit exhausted. And sometimes you get that next aggressive push, or sometimes you get that reversion. So this was 1 candle, 2 candles. The next week is next week. So we'll see what happens here. I'm expecting buyers to continue to push and try to get above the all-time high, even with the adjustment on, right? That's what I'm looking for price to do. Now, how can I support that thesis besides just telling you this is what I think will happen? Well, the way that I support that thesis is I come down to here, right? And I look at the volume, right? The volume from Monday, the week of January 8th, was high, right? This was an aggressive volume. But look at the next week. We put in more volume last week than we did the week before. Therefore, we had more buyers still interested in price. Does it mean that we won't reverse tomorrow or all next week? No, that's not what that means. It means that I'm looking for ways to support my bullish thesis so that I can illustrate it to you and articulate it with great points. These are really good hypotheses. This is a good hypothesis. And to support my hypothesis, I'm giving you things that the market has already done. Do I know what the market is going to do? No, but I can tell you what I'm looking for it to do. All right. So with the market structure, we expect a break of the high, and then potentially later, I don't expect all this to happen next week, but at some point, if we break this high, right, we break this high right here, we'll come back down and we'll retest this low, right? So at some point, I'm going to be looking for price once we get above this high right here, right? I'm going to be looking for us to retest that 7,038 level, right? So that's kind of what I'm looking for. How far we go, nobody knows. Nobody knows where we stop when we hit extreme greed, right? So that's the weekly time frame. Let's drop down to the daily, right? And I'll show you guys. I got another macro thing that I want to show you guys once I get done with everything. So just kind of stick with me for a little bit. All right, so now we're down a little bit closer to price, right? And we got this daily time frame right here. Now, I already have this drawn, but what's the point of doing that when I can just show you guys right here in real time? Now, if you paid attention to the last top-down analysis video, I believe price was about right here. I think we were right in this consolidation right here, right? And my bearish thesis was the fact that we were still rejecting this supply zone, right, on the daily, right? And I said, if we can continue to reject the supply zone, what you want to see is you want to see bears take out at least this level, right? You wanted to see 668 broken, right? First, that would indicate a change of character. And then you wanted to see a break of structure down here, down to 345. If I'm saying it wrong and you think this is a break of structure and you think this is a change of character, I don't care, right? The only thing I care about is that you understand how price is working, right? vocabulary doesn't matter to me as much as understanding what the vocabulary means, right? Therefore, these buyers failed. My bullish thesis, which I was more inclined to believe, I was more inclined to believe that the bearish thesis would hold, but the bulls had other plans, and that's okay. But my bullish thesis was prior, we had a weekly supply zone at 233, basically the same supply zone that we're in right now. And I said, hey, if we can get an extreme push, I expect us to push into the supply zone. Remember, the center of the rectangle usually marks a fair price. Well, that's exactly where we came to. We came to the center of this supply zone, and then price kind of paused because the market closed. It was saved by the bell, so to speak. Bears have been getting absolutely cooked, and on Friday it was no difference. Uh, all of the stocks are pushing all-time highs. If they're not above all-time highs and setting new ones, they're getting close to all-time highs and probably looking to set new ones. Okay. So that's the daily time frame. Again, the same thesis applies on when we break a high, we expect price to come back down and retest the low, which puts us right back into that same area, right? This low right here, down to about 967, 16,967, 17,000 range, right? Where all of this consolidation happened, and the result was a break above this high, right? If that's the case, and we can, wherever we continue, wherever we finally find sellers, where's price most likely going to go back to? That's what you're trying to tell yourself. Until we build more structure on the daily, right? Like put in another low and another base, right? Price is most likely going to return back to home base, so to speak, right? That's the way I look at it. Like we went on we all left home, right? We were packing our bags, consolidation, right? We took off, we left home, right? And now we're coming back to home base to reload, right? That's how I look at supply and demand, or the market structure portion of it, right? So now that we got down to the daily, let's come down to the 4 hour, get a little bit closer to price, just so we can kind of see what kind of plan we can have for tomorrow, right? Or going into the week. I've already told you kind of my levels. You can write them down. You can rewind the video back. Heck, I don't even have them written down. I just have them here on the chart. Or you can just tune into the Trader Shop, where we go over all of these levels every single day and we create a plan every single day. But down to the 4 hour, if we come all the way back over here inside of this supply zone, right? And this, now we're getting closer to price. We're not looking to trade as swing traders. We're looking to trade as, day traders, right? That's what we are. Right now, you can see that this level right here at 474, where price currently closed at the 5 p.m. or at the close of the New York session. When the Tokyo session opens up today at 5 p.m., I expect for price to either, obviously, price is either going to do one or two things, but this is a good level for price to go back down and retest. But if bulls are in control, the next area is going to be that 17,500 through roughly about 17,588 is where I'm going to be looking for potential rejection. Now, remember, the reason why the Tokyo session and the London session volatility is not the same as the New York session is because the stock market isn't awake yet. Therefore, the driving factor behind a lot of the tech sector, right, that's getting moved right now, is the driving factor is the Apple's, the Magnificent Seven, the Apple, Microsoft, Tesla, Nvidia, all that stuff. So during the Tokyo session, those stocks aren't being actively traded. Doesn't mean people aren't putting in orders for them. It just means those orders aren't being executed until about 3 a.m., 4 a.m., whenever the New York session officially opens. That's why that volatility doesn't come in yet. So that's why a lot of times, whatever you see us doing in Tokyo session or London session, we usually do the opposite for the New York session. So just understand that part about it. But that's pretty much all I got for the NQ. And now we'll just kind of switch over to ES, where the information is about the same. The levels are just totally different, right? So if you're interested in NQ and ES, stick around. If you only wanted to hear NQ, that's all I got for NQ, because the next one is going to be the VIX, as well as I want to show you guys something from the macro perspective. Let me just check how we're doing on time here. Oh, we're good. Oh, awesome. All right. So if we're looking over here at the ES, right? ES is about the same. We got that monthly demand zone down here that I feel like we'll touch whenever we get that black swan event. If you it's so funny because if you look at there's a story on JP Morgan, right? And they're discussing, they're bearish. They're saying they're still holding strong to price coming back to 4,200. And I said, well, dang, why would they say 4,200? But if you take a Fibonacci from, I believe it's like from the bottom of here, right? Like from the bottom of here all the way up to like 4,800 or 5,000, like all time highs or something like that. I think it puts us like right at 4,200. Like it's like right at, yeah, it's like right at 4,368. Basically, it puts us right back in this demand zone, which is exactly where I have price coming back to at some point. Do I think it's going to come back next week? No. I think whenever this market decides to be bearish, we're going to come back down and we're going to end somewhere around 4,200. I 100% agree with the analysts over at JP Morgan because I feel like, never mind. I'll break down why I feel like that at a later date, or just come to the shop because I can go on a rant all day. Anyway, on on the monthly though, we got that demand zone right there, and then we got this supply zone right here, the same supply zone that we had on NQ, right? That supply zone on the monthly sits between 47.95 or 4,800, give or take. 4,800, we'll call it because it's an even number, and then all the way up to about 5,021. Again, watching this on B adjustment and understanding that on B with B adjustment on, we haven't broke all-time highs, which would be around 5,020, 5,024, right? But if I turn it off, right, ES is also above all-time highs at 4808, right? That's why 4808 on my last videos that I didn't post on YouTube, but on my last videos, I had 4808.75 as a very key level. It was because with B adjustment on, it was a very, very key level. So I'll take this down and we'll go down to the weekly. And like I said, I'm gonna run through ES a little bit faster because again, we just went over all of the information you need to know on NQ, and they're usually about the same. So on NQ, on ES, however, you'll see that this supply zone here, this supply zone here on the weekly, we're pushing through it. We're right at the top of it. One would say we closed above it just barely, right? But usually what happens is after we break above a supply zone, we ended up going back and retesting a high. Now you can see on ES, if we take that same Fibonacci, right? We take that same Fibonacci and we go wick to wick, right? Free game here. If you've never done this before, you should try it, right? You take that wick to wick on the Fibonacci, where does it put you? Right at 30%. Buyers thought this was a good Walmart, flip the tag price. So they bought, period, point blank, right? And those are things that you can do because time is fractal. You can use that same logic on the daily, the 4 hour, the 15 minute, the 1 minute, the 5 minute. If you don't believe it, go back and retest it. All right. That's all I'll say about that. I don't want the Discord people to kill me. So now where do I think price is headed? I think, again, I have a strong belief that we're going to start pushing into these supply zones and start pushing for that 5,000 range, right? Am I looking to short the market when we come up here? Absolutely not, right? Because I'll give you this gem. If you follow me on Twitter, I've said it on Twitter before too. Everybody that I see, playing the market on YouTube, a lot of times they make the mistake of saying, well, we just broke all-time highs. It's time to get short. I'll tell you this right now. If you understand how the market moves, the market's not going to start to sell until the majority of people that have the big money decide that it's time to sell. The macro picture starts to sell off. Therefore, everybody that is trying to short the market now eventually just fuels the market higher because they become buyers. If you sell the market, in order to get out of your position, you have to buy the market back. So if there's nothing above you in regards to sell pressure, well, you're basically just running right into a brick wall, right? Eventually, you're going to get stopped. And I think in physics, they call that like inertia. So enjoy that one. All right. So that level on the supply zone is 49.30 through roughly about 5,025. And that's the next level I feel like we'll see a rejection. It's a nice psychological level. 4,900 is nice. 5,000 is nice. Nobody knows where it goes. That's why we just kind of do a review, right? So if we go down to the daily on ES, it's the same picture as NQ. I'll keep saying that because it helps me move through this a little bit faster. But again, we got this level right about here. Here it is right here. Right here on the daily, we got this next supply zone, and that level, shocking, is 49.15, right? Like I said, 4,900 to me is going to be a key level. It's the next psychological level of resistance. It makes sense for us to start rejecting price there. It is not a guarantee. And even if we do reject price, well, in regards to market structure, we built a low down here on the daily, down at 48.03, right? So at some point, now remember, these are day candles. So this could take a long time before we come back here. This is like a longer term macro thesis, right? These are daily candles. We broke above this high at 48.41. We hit 49.15. Well, when we start to come back down, there's two things price can do. price can either retest the high, right? Or it will come down here and retest the low that caused the break of the high right there. Okay. Therefore, you can deduce. A lot of people do this. I don't. I like just marking the candle where the base was at. But a lot of people, what they'll do is they'll just pick this entire box and they'll say, I'll look to buy price, or I'll look to be a buyer when price comes back into this box. Usually it ends up being the middle of that box, which puts you right back to where I like to buy it anyway. It's just tomato, however you want to set it up, as long as you understand it is the most important part, right? So yeah, that level is about 48.38 down to I don't know 47.50, right? Supply zone at 49.15. Watch out for that on the daily. Now let's drop down to the 4 hour and we'll see let me see if I can go to the left and find that 4 hour supply zone here. I apologize for not being completely prepared for this. I had a time that I wanted to do it for the Discord, which I'm doing it right now. And it was my birthday yesterday, so I decided to cook for my family today. We made a big brunch, so I'm a little bit behind, but that's okay. The 4 hour we already have marked, and that's at 49.35. Remember, we got the daily at 49.15. 4 hour we have 49.35 through roughly about 49.57, and then 49.91 all the way up to 5,009, and then it's all-time highs at 5,029, right? So for the bearish plan, right now, or the bullish thesis, I expect us to keep going, right? Like that's just what I expect. I think that the next thing that I'm going to go over is going to give us a little bit more detail on how we get there, right? So let's shoot over to the VIX, and I'll go over this real quick because I think I'm pushing 30 minutes. I'm at 26 right now. I like to keep these under 30 minutes or 30 minutes. This one might go a little longer because I do want to show you guys something on the macro, but stick around. So on the VIX, okay, remember the VIX operates, even though it's a volatility index, it still operates under the same rules as everything else. If it's on a chart, they operate under the same rules. What is that rule? Well, if we break a high right here, right? So we'll go ahead and make that pre. So we break a high right here, boop, right there, 14,945. We broke that high. We came back up. We retested that high. And then we pushed and put in a new high. Okay. We broke this high here, put in a new high. Okay. Now remember that this is still king right here. This swing high right here is still the king, which means price is still in a downtrend intermediately, right? We're in an overall downtrend, right? But we're in a downtrend intermediately until this next high is broken. So what am I looking for to be bearish? If we are to get bearish, we need to get back into the 16 level. The reason why I'm still looking to be bearish is because we put in this low right here, right? Down here, right? And price was not able to push below it. Now, I'll start to get a little worried for the bears even more if we start to break below 14, because that will mean this entire rally, right, got ate up, and this low was able to push price and down and put in a new low. So if the VIX gets below 14, it's going to be a sign to me that the market is about to get very, very bullish. However, there's something else you should look out for on the VIX. And this is something that I've been noticing a lot while watching price on the VIX. What I've been noticing is, and I know you guys, if you trade, you know this, right? A lot of times when we get these rallies where the ES rallies 60, 70 points, NQ rallies 2, 3, 400 points, they're slow. They move like this all day, like at a snail's pace. So the one thing that I've been noticing, I've been keeping a little data on, is how does the VIX move on those days? Well, usually what I've been noticing is on Friday, we move from a range of 14.77 down to about 14.45. They kept the VIX in control in a 30-point range so that they could continue to move price up with low volatility, but with high volume, right? There's no one person that can do that. That's an algorithm that's doing that, right? It's kind of like a slow volume programming. It's like, we want to go to this price, but we don't want to give it too much volatility. So keep the VIX down low, right? So that you can continue to get to the price you want. Now, if we're going to remain bullish and you're looking at the VIX as an indicator, just remember the levels on the VIX. As long as we stay in this demand zone, I think the VIX will still allow price to push up without pushing down too much further, right? If the VIX starts to break down further than that, like I said, that 14 level breaks below this low at 14.3, you should be looking for the market to really get bullish. But I would like to see the VIX just kind of hold here throughout this earnings session, right? and then get super volatile maybe toward the end of the week, like when it's time to kind of pull back a little bit with core PCE. We've gotten all the earnings we want. We got everything we need, right? I'm not going to go through the monthly, the weekly, the daily on the VIX. I like to just talk about the 4 hour and just kind of give you my perspective based off my thesis. Those are the three things that I like to look for on the VIX, but I want to take you right back over here to the ES. If we come over here, let me go back a little bit here. All right, there we go. Now, here, guys, the COVID, the virus came in back in 2020, right? January of 2020, right here. Right? We just put a line right there, right? After the virus came in, the market sold off and everybody thought the market was going to crash. People started selling out of their 401ks, all that good stuff, right? But from a market structure standpoint, the only thing we truly did was came back and retested this low, right? Or this low, however you want to look at it, right? Once we retested the low, we decided to continue to push up. Now, just to give you an idea of how the market is basically on a clock, right? Which is one of the things I do agree with when it comes to ICT, and that's a whole nother subject. But if we were to put a Fibonacci all the way down to the end of COVID, all the way up to where we came to where the market double topped and we sold off in 2022, right? And we just go straight across. Price comes right back down to 366, 367 area. And basically, it's discounted at 50%. They waited until they got a discount and then buyers stepped in. So all this tells me is that this area was very, very bullish, right? We should be looking to break this high, right? Those three candles that I told you about, 1, 2, 3, right? These are yearly candles, so who knows how long they last, right? And then when we do come down, I strongly expect us to come back down. And if I was to draw a line at 30%, everything that I just said about JP Morgan, right? And this is why I say the market's on a reel. JP Morgan is predicting what price? 4,200. If you go all the way up with the Fibonacci and you go to 30%, the Fibonacci sits at 4210.50. I'll leave you guys with that. It's been about 36 minutes. I really hope you enjoyed the top-down market analysis. If you did, please make sure you like, subscribe, aka tip the barber is what we call it in the trader shop. And come check us out Monday through Friday down below. If you do use prop firms, we do have an Apex discount code, and it's been running across the bottom of the screen. If you want to support the channel, please use that. But for now, we'll check you guys later. I'll see you on Monday, man. Peace.